evening, everybody. Welcome to the TraderMerlin Show. It is your Thursday edition, a wild and crazy show. Based off the comments I received yesterday, or a couple days ago, I received a question from James that what is the wildest thing that you have seen in the markets? And having traded since, really actively since 1996, and a little bit before that, just kind of with my dad. You've seen a lot of things. And I sat there last night and kind of went through a whole bunch of what were some of the memorable pieces, what are some of the stuff that stood out to me, and what's the stuff that's standing out today. Because obviously the things that happened in the past, we learn from them. You try to absorb as much information about those situations as you can, and they remain memorable, but they aren't really that actionable going forward, right? You can only learn from those things that have happened. So what I thought I'd do today is kind of run through a few of the things that stood out for me as wow, really crazy pieces that I've seen in my 27 years. And what I would love to see for all of you guys and gals is if you have something that you would like to throw into the mix, just go ahead and type it in, because I will gladly go and look at some of those charts. I don't get to see everything, and you may have seen something that just is jaw-dropping as well, that maybe I would like to who knows, maybe it could be a part of my shtick going forward. So here's what I'm going to start with. The strangest things that I have seen in the markets. I'm going to go back to my early days, and there'll be some storytelling going along with this as we progress. As you guys know, I started off trading on the floor out in Irvine, California in 1998. So it's been quite a long time since I was on that trading floor, obviously, but going way back to my early days. And Qualcomm at the time was one of the big, high-flying stocks, and it's kind of hard to see it here because it's currently trading at $175, but that does not do it justice. This thing is split 2 for 1, a 4 for 1, another 2 for 1. But I want to go back to this right here, and this is where I really learned a lot. I've mentioned this story before, but I kind of want to convey it once again. So Qualcomm, as you can see, been around since 1991, I think, is when it first went public. Yeah, December of 1991 is when Qualcomm went public, hit a low price. This is split adjusted of 38 cents. Gotta love that. Okay, so if you look at the price chart going into the 90s, what happened here, and I can't remember the date exactly, I believe it was this day right here. And it doesn't seem like much, but you guys have to understand that this has been split adjusted multiple times. This has been split adjusted, again, a 2 for 1, a 4 for 1, and a 2 for 1. And what makes it stand out to me is up until that point in 1999 when this happened with Qualcomm, this was like April of 1999, I'd been trading my own money. I started off with a $30,000 account and was kind of, mixed success, starting to build and find my way. But again, the way that I learned was by going to the back office at the end of the trading day. What I first wanted to do is I'd walk around the trading floor at times, and I would check and see how other people were doing, right? I'd go and see, how is this guy doing? And you'd see some people celebrating, oh yeah, they're kicking butt and high five, and I'd go and check and see how they were doing. And surprisingly, this has really taught me a lot about the markets that most people don't get a chance to see, especially those of you who have never been in a big room full of traders. It's a social experiment, because I will tell you this. Out of the 180 people on that trading floor, maybe 10 were consistently good traders. And not one of those 10 traders was bragging, celebratory, high-fiving. They were never the ones drawing attention. They all were just kind of quiet, kept to themselves, and were just trading, getting it done. Out of the biggest losers on that trading floor, the ones who lost a lot, they were the ones that if they had a small winner, they'd be high-fiving and screaming and jumping up and down and the most boisterous. So I guess that's a lesson for life. Usually the ones who are the most flashy and braggadocious are the ones that are lying through their teeth and are broke. Some of the richest people I know drive Honda Accords, because why spend that money on a Bentley? I don't need it. So to make a long story short, I would walk around and I'd find out what happened to certain people and what went on. So one day, there was a guy on the floor. He sat right by the front, and apparently I came to find out that he was there, really nice guy, and then just disappeared. So I asked what happened to that guy. And the back office told me. I pulled up his trade sheets. And again, Qualcomm was one of the busiest, most amazing stocks you could get during the 1990s. It was so crazy moving in 1999. There was a day where it was up $100, and I believe it was this day here. It was up 100 points in one day. And this guy took it home short. And he took it home short, and the next day, he took 1,000 shares home short, and the next day, it gapped up like another 40 points. Boom, $40,000 out. He takes it home again the next night, and all of a sudden, just in a couple days, this guy erased his entire account. Now, that wasn't specifically a trade that I had seen or been a part of, but just understanding the power of going against the trend. Like, that was my first real lesson of the trend is your friend. This guy clearly thought it could not go up any higher, and he kept shorting Qualcomm, and ultimately got his teeth kicked in by that thing and never to be seen again. Don't know what happened. So for me, I'll start things off with Qualcomm in 1999, just because it was such a memorable learning lesson in the markets. Rivian stock had a nice jump today, Merlin. Yep, I know. I still got my shares and my put options. So next one for me is Exodus Communications. And again, why am I classifying these as some of the wildest pieces? This one for me may not seem like that amazing to most of you, but I had skin in the game. I had bought 100 shares of Exodus Communications at like $80. And the thing which sucks, like, was it 80? 70 something. Anyway, it was ended up being like an $8,000 loss overall. So Exodus Communications was all the rage. It was internet security, and everybody was talking about it. It was the next biggest thing in the markets. I'm drawing a parallel here to something like NVIDIA. It's the next biggest thing for the markets. You go back a couple of years, it was cannabis stocks, then it was EV stocks. It's always something new, and this was internet security back when .com was surging. So Bill Clinton, who was president at the time, made a statement. He declared Exodus Communications a national treasure that is critical to the security of our internet. And I was like, hook, line, and sinker, boom, bought 1,000 shares of this. And I was like, here we go, baby, to the moon. Here's a chart of Exodus Communications. It did nothing but fall from the time I bought it. And this was my next big learning lesson. And I think their biggest losses and the craziest things that you've seen should be learning lessons for all of you. My learning lesson here was, where the hell is my stop loss? You know, you could tell by the way that we look at the markets. If right here, where it all of a sudden started to make new lows, for those who can't see my cursor, that's like in early 2000, mid-2000. It broke those lows right around $58. That should have been my signal to close the trade and get out. Just be done with it. Instead, I held it. I held it to 50 and 40 and 30 and 20 and 10, and ultimately it was trading at like $1.30, and I still owned it. It got to $1.30, and I bought something like 20,000 shares of this thing. It had a huge rally from like $1.30 to $5. I cashed out, luckily erasing most of my losses. However, to this day, I still own Exodus Communications. Now, why do I still have it? I guess I have it as a memento of stupidity, because that'll never come back. Exodus is gone. It will never be anything ever again. But where was my discipline? Where was my stop loss? Where was my risk management? I mean, how crazy is it that a company that just a couple years before was declared a national treasure to the United States goes bankrupt? And it's because I didn't do the research, right? I didn't dig into it. I didn't look at the fundamentals. I didn't see they had $60 billion worth of debt in 2000. That's a lot of money. They were just taking on way too much debt, and they would never have survived. That's my own fault. So both of these two learning lessons, one was watching how somebody else ignored the trend. Second one for me was watching when the whole world is saying something is so great, you might want to think the opposite direction. And that kind of goes hand in hand with a couple of other names. I see Big F here says, losses on WorldCom and Enron opened my eyes to the shenanigans on Wall Street, more sad than strange, I guess. Yeah, I would say it's strange, because here you have a company, it's on my list, Big M, it's on my list. Enron is definitely on there. I have Enron and WorldCom as well. I'll show you both those charts. You know, here's Enron. Oh, sorry, this is WorldCom's chart to start. You know, WorldCom was this big, darling, amazing company. I mean, it just kept shooting up and up and up. And I remember day trading this thing heavily in the 1990s. Right? It was just a wild mover, so you got plenty of action. And then all of a sudden, their accounting irregularities came out, found out the whole thing was kind of a scam. And from 1990, it peaked. Looks like, I don't remember the exact day, but it looks like about July or August of 2020, or 1999, it peaked. And by 22, gone, bankrupt, insolvent. I mean, that is an amazing fall from grace for something that is one of the biggest companies on the exchange at the time. So you have Enron, you had WorldCom, were kind of high on my list. Here's the Enron chart, which is very similar. You can see surging again. They were energy traders, and fraudulent numbers again. Hit $90, and within a year and a half, ended up at zero. So that type of thing is why I'm such a stickler for stop losses and making sure that you have a point where you say, I'm out. There's a gentleman who watches the show regularly. He usually comes in the last 20 minutes. If you're here, Michael, you know who you are. a lot of the stocks that you're looking at to buy have charts that look like this, but they're all the way down at the bottom. So at least you're not riding all the way down, but you're buying stuff that is weak for a reason. When you see something that's trending down, it looks just like it's going to zero, it most likely will. So you got to treat that as a total gamble trade. Do not do it with the bulk of your capital. Be very careful because you could lose everything on that specific trade, especially with these. Oh, that's a good one too. Sit here. Yeah, Nicola's a good one. Let me bring that one up here. I'm going to get through mine, and then I will go through the rest of this list. So let's go forward a little bit. And granted, I have thousands and thousands of trades, and in my mind, I don't even remember what I have for breakfast sometimes. So remembering all these trades is a tough one. But there is one that some of you guys have mentioned as well, which might be the strangest thing that I have ever seen. Liz mentioned it today. I think a couple people mentioned it yesterday. And that is the crude oil chart from 2020. That is something that I didn't think was mathematically possible. And it was never taught to me. It was never even a discussion point. I don't know if it's ever happened in the history of financial markets where something went negative. And not just like negative a penny, negative $1, but negative $41 per barrel for crude oil. Unbelievable that could ever happen. And let's bring up that chart. That still to this day might be the craziest thing I've ever seen. Here's the crude oil chart, and everything looks great. And there it is. There's that big drop that we had back in 2020. May? I forget the exact day. Let me get the day there. April 20th, 4/20, Earth Day. Remarkable that this could happen. And up until that point, I've traded oil futures, sure, but I guess I just didn't understand the full complexity of delivery and storage of that commodity. That it's a physically delivered commodity, that it has storage capacity limits, that if you got no place to put it, what are you going to do with this oil? You're not going to do anything with it. It's wasted. So you're literally fighting to get rid of these barrels of oil that may be delivered to you. And that, to me, might be the craziest thing I've ever seen. And you guys might remember when we were doing this show, I was saying, buy oil. Buy oil. There's no way oil is going to go to, if all of a sudden everybody's going to stop driving cars. It was, Jim, it was April 20th. April 20th of 2020. 4/20. 20. Wow, that's 3 20s. 4/20, 2020. And I was very fortunate. I have to get rid of that last candle. I was very fortunate because the next day I did manage to get some, I think it was double leveraged long oil. But I got locked out of everything. Futures, they wouldn't let me trade futures contracts. I couldn't trade USO. But I forgot the one I bought, but I ended up buying it, held it for about a week and a half, and made huge money on it. I was very happy with that one. I wish I would have kept it longer because the charges continued to go and go and go. But that is probably the strangest thing that any of us will ever see, going negative 40. Now, this is important to know for anyone who is trading commodities, that there are certain contract specification pieces. And, this question came up the other day, which was a great one, which is, what about natural gas? Could natural gas go to zero? And the answer is no, because all they do is just open up, let the natural gas go into the air, and that's your storage. You don't want to do that, but you could do it that way. If you've got 10,000 barrels of crude oil and you just open those up, the EPA is coming after you, right? You'll go to jail for just dumping oil places, right? Call it Exxon Valdez and see what happens. So certain commodities where storage is an issue, again, oil being the biggest one, there's always that possibility. Do I think it'll ever happen again? I don't believe it will. I think it's such a rare one-off event that just now everybody is aware of it. Again, that's that black swan, right? That situation that nobody knew could happen until it actually happened. That might be the biggest one on my list as far as, wow, crazy. Okay, so far I've got Qualcomm, bad thing. Right? When I say strangest doesn't necessarily have to mean bad. But Qualcomm, in that case, I learned from it as a bad situation because it's a good question, Pepe. Can they legally dump it? Who's going to track it? Who's going to know? I don't know. So Qualcomm was a negative piece because this guy lost everything he owned. I know he lost everything on that Qualcomm trade, shorting it. Exodus was my personal experience. I was long on it. Rode it all the way to zero, still hold the shares as a memento, as a tattoo, if you will. Then you had Enron, WorldCom, right? That were just the biggest companies out there. fall from grace, all liars, cheats, and thieves. Yeah, I say Enron was a nightmare for the employees. Well, if you think about it, so was WorldCom, right? Because a lot of those employees were taking their 401ks or stock option pieces and buying more and WorldCom stock. That's part of what they were giving them, discounts to buy WorldCom stock and driving the price up. So all the employees had all this worthless stock. So really, shame on the guy. I cannot remember his name, but he really screwed over his whole employee. Everybody on that worked for him was buying shares of his company because they felt in his leadership. Gosh, his name's on the tip of my tongue. I just can't remember it. The guy lighting up a cigarette nearby will know. Yeah, if you release that much natural gas, I guess you just, if you're in Oklahoma or something, you got those pipelines way out there, you just open up and let it out. It's not as bad as it would be for you would have to flare it. Shmev, that's what John Rowland was saying. He says you'd flare it, which is basically you're starting the fire and you're burning it off as it goes. So yeah, you wouldn't just open it up and dump it in the air. You'd burn it off. Okay, so those are bad. But I want to go to one that's good, and I've talked about this one, so we're going to skip the gory details of it. But one of the craziest things I've seen is just the price appreciation, the historical price chart of my favorite cryptocurrency, and that's Bitcoin, 2012. And that's when I first heard about it. I just looked at it in 2012, and I was like, oh, okay, this is interesting. But, if we go here on a monthly and go, let's go monthly. And you can go, this doesn't go that far back. This one only goes back to 2011. It may not look like it's that dramatic of a rise. Well, it is. If you go from this low in 2011 to where we are as of right now today, there's nothing that has a greater percentage gain move. Nothing. Ken Lay was Enron. The other guy was like a Williams or something for WorldCom. I'm pretty sure Ken Lay was Enron. So there is nothing, and you can correct me if I'm wrong, find out if there is, but I don't believe there's anything in the history of the financial markets that in a window of 13 years has moved up. I'll give you the percentage gain just from those lows. This is still not even the lowest price of Bitcoin. That's just the lowest graphical. Oh, there you go. The lowest graphical representation. That is I'm trying to get the exact percentage for you. That's a 3.1 million % rise just since 2011. Now, if you go back to 2009, the first recorded trade, really actual trade of Bitcoin, I had to go through and look at a bunch of community blogs, was really on a 0.009 was the lowest price that Bitcoin, won't even let me do that. I have to go 0.09. 0.009. It's literally, it's off the charts. It's way down here. It's not even going to show up. 0.009 is the lowest price. And if you go off of that, you're talking like 12 million % rise since 2009. That to me is incredible. And of course, you guys know how I feel about this price pattern that forms. And I believe we're witnessing it happen yet again. We're going to start to see this thing accelerate and accelerate and accelerate. And I think it's amazing. I think... there was a gentleman who sent me an email. Let me just real quickly respond to this one so I can kind of kill two birds with one stone. BM, it's a tough last name, Zadenag. He showed me a picture about Warren Buffett, and it's this one here. He says, Warren Buffett says he wouldn't pay $25 for all the Bitcoin in the world. He considers crypto rat poison and warns, I can say with almost certainty that they will come to a bad ending. I agree. I would agree that most cryptos will end badly, but because of the adoption, I don't think Bitcoin will. And when Warren Buffett says something like that, it's because he doesn't understand it. Remember, he got into Apple very late because he didn't understand Apple. And if you look at all the businesses that Warren Buffett and Charlie Munger owned, they were all centralized entities. Anyone who wants to buy a company wants it to be centralized because they control all the power. If it's a decentralized model like Bitcoin or Ethereum, you can't control anything. It's open. So that's why you slander it. That's why you hate it. That's why you go after it like Jamie Dimon, because not only is it open and it's now power to the people, but Jamie Dimon's business is threatened by people becoming their own bank. So to the comment from BM Zadenag, I don't care what Warren Buffett says. And honestly, if you don't have to like Bitcoin, you can hate it with all your heart. I don't care. I really don't. And it doesn't make a difference to me. If you hate something, you don't have to buy it. I, on the other hand, do buy it because I think Bitcoin does have some serious potential out there. Now, again, he says, I'll exit my position third quarter of 2025, as will I. So wanted just to quickly get to your question there on that one. People say things like that, and then when they miss the boat on it, yeah. And it's funny, Big Ed, because you could make the argument that, if you buy it at 66,000, you missed the boat. I don't think so. Remember, they are not making, they're making more. But if you look at the inflows to Bitcoin of 10,000 a day for the ETFs, which I was just surging, and only 900 Bitcoin created a day, imagine what's going to happen when the halving happens. When we get to May of this year, and it goes from 900 Bitcoin a day to 450 a day, price is going to surge even more. So, yeah. Anyway, that's probably one of the most amazing things I've seen, and it's been a fun one for me, of course, because I own a bunch of Bitcoin. Now, let's move on to other stuff. And most of my crazy, strangest things has to deal typically with bad stuff, right? Things where it's a money grab, it's a greed thing, it's trash. And that would bring us to the Terra Luna. And I do owe a couple of props here to some viewers because some people asked about these ones. Let me just get your name on the show. Mark F. responded that the collapse of Terra Luna and FTX was kind of the wildest thing he's seen. And I would tend to agree with you. That one's a wild one. And Chris, my friend Chris, he says Bitcoin, the best 3-year roller coaster I've ever been on. That's a good strange to be on, right, Chris? It's always good to be on the right side of something when it's ripping like that. So let's talk about what happened with Terra Luna and FTX. I know most of you probably know fairly well because I did talk about it when it happened. But for some of you who might be new, well, first off, hit that subscribe button. What happens when a brand new industry is emerging, right? When the pedals are just coming out of the ground for a new industry, whether that's AI, whether that's the cannabis industry, whether that's EV companies, whether it's .com, doesn't matter. It will happen from now till the end of time. There will be new industries popping up all the time. And when that first few start to just take off and everyone's like, dude, I'm buying as much of this as I can. This is the greatest stock. It's going to be huge. When that frenzy happens, there is a subset of the world that you could label as scumbags. People who have no moral backbone and deserve to be pushed into a giant trash compactor with all of each other and just smashed. That might be a little bit cruel. But there's people who just do not care about you or your well-being at all, and they will take whatever they can. They will steal, rob, do whatever they can to take your money. And that bothers me significantly. I wish those people could all be pushed off the face of the earth. However, with crypto, you now have so many of these people because it's so easy to make a cryptocurrency. It's so easy to get an influencer to pump your cryptocurrency and convince people to buy it. It is one of the easiest things. And I went through a moral dilemma because I was like, man, I could make probably $50 to $100 million within 6 months by making my own cryptocurrencies, getting a few people that I know to promote it and push it and talk about it. But I knew what would happen. The end of it would be everybody who bought that would end up losing their money, like Shiba Inu. At the end, someone's going to be complaining they lost so much money on Shiba Inu because it will go to zero. It serves no purpose. So what you had is this lending protocols, right? And for those who may not know what a lending protocol, yeah, exactly, Liz. Alex Mashinsky, he could go to get an electric chair for all I'm concerned. What you had is lending protocols. And what lending protocols were for cryptocurrency is equivalent of what a bank is for your currency. You take your money, you put it in Chase, they pay you 0.01%. You go to Ally Financial, they pay you 4%. You choose where you want to put your dollars, and they'll pay you interest on it. In the back end, your bank is lending that out, as we talked about on yesterday's show with Basil's 3 discussion. What was happening with Terra Luna is they were looking at these different crypto lending platforms like Celsius, Voyager, and BlockFi. And Voyager would say, hey, we'll pay end users 6% if you park your Bitcoin here. So what happens is I put some Bitcoin on Celsius or Voyager or BlockFi and I get 6% interest. Okay, great. For me, that's awesome. I'm now storing my assets somewhere and I'm earning yield on it. Well, unfortunately, I didn't think this through because you have to go, well, how is Celsius or Voyager or BlockFi making enough money to pay me my 6% and also make themselves some money because this is not charity? What was happening is Celsius was paying me 6%. they were lending my Bitcoin out to a company called Three Arrows Capital, who was paying them like 12%. Okay, so for Celsius, I'm borrowing Bitcoin. I'm giving up 6%, but I'm earning 12. I make 6% for free. I'm just facilitating this transfer. So Celsius takes my Bitcoin, pays me 6%. They lend it to Three Arrows Capital, who's paying Celsius 12%. And then Three Arrows Capital went to Terra Luna and invested in their stablecoin, which was paying about 21%. So all of a sudden, it's this list of, you're up the ladder rung, they're paying more and more interest. At a certain point, it's going to max out. And there was nobody willing to pay more than 21% interest. So all of a sudden, the house of cards came falling down with Terra Luna and their stablecoin. When that happened, all of the value that was at Terra Luna locked in trying to earn that 21% interest just evaporated. So now Three Arrows Capital's like, oh shoot, we don't have any money, we're going to go bankrupt. And then they look over at Celsius and Voyager and they just wave at them like, sorry guys, we're out. And they leave the country, go wherever they're going to go. Celsius and Voyager and BlockFi lose most of their capital as well. And of course, FTX was tied into this. But that's really the domino effect of it, which I think is a really interesting phenomenon that happened. And let's just go look at Luna. Nope, this is not the chart I want to look at. Let me bring up a daily here. Hold on, this is not the chart. I need to go into crypto, Luna, Tether, there you go. So surprisingly, it's still trading at $1.14. Like people still believe that this thing has legs. And again, fool me once, shame on me, or whatever that damn thing goes. I feel like President Bush right now. I can't remember the phrase. So there's your Terra Luna. And this was an incredible fall from grace. I mean, it's just something that was so unbelievable. In a period of 4 days, it fell 100%. It literally went down to zero, lock limited down, and then it popped up shortly after that, about a couple weeks. Hey, good to see you, day trader. If in crypto, if we don't book profits, bears will eventually end up in below cost always. Yeah, it depends on the crypto for sure, right? There's 2.3 million cryptocurrencies out there. A vast majority of them are scams, garbage, junk, trash. So we'll go to zero, but there are some that I think will do very, very well over time. So yeah, might be the craziest thing. And what made this the strangest, and not strangest, but maybe the craziest was the full-on impact from this. Because what happened is this massive sequence of events that what a lot of people thought was this is going to kill crypto. This is going to just absolutely annihilate the whole industry. It's done. It's pretty impressive, the resilience of crypto. This move right here erased $60 billion worth of value. So let that sink in. $60 billion were evaporated because of what happened with Terra Luna. Of that, 70,000 of it was mine. I was just a little piece of this puzzle. I had a slight bit of Terra Luna. I didn't have anything staked on their stablecoin, which is an algorithmic stablecoin. And it proved a lot of different things. But bottom line is, it proved to me that you really got to do your due diligence. You have to be very careful and self-custody your assets because Celsius, Voyager, BlockFi all erased massive amounts of customer funds. So that was the Terra Luna piece, might be one of the strangest ones. And let me see. What do you guys have? I have one more. I actually have two more that I think are current, that are right now. As of today, these are probably the two strangest looking charts in our markets. What do you guys have? For me, BlockFi was the worst investment. Well, BlockFi really wasn't an investment, right? I mean, I guess that's the argument that's there. The worst decision you made, because you actually put money at BlockFi and you lost. Yeah, unfortunate. Sorry to hear that, Shio. I did too. BlockFi, I think the announcement just came out that you can now get redemptions. Oh, that's a good one, Andres. I didn't remember that one. Actually, AMC was good, but the GameStop was better. GameStop, the GME is absolutely just crazy. The movie, by the way, if you haven't seen it, I really enjoyed the movie. Let's go back to the squeeze. Was it that long ago? Oh, it was here. This is that short squeeze. It was a short squeeze, which turned into a gamma squeeze, which turned into just unbelievable move to the upside. That was a phenomenal move. Yeah. Short squeezes are no big deal. It's kind of an industry norm, but this was just, it had taken it to the extreme. That was a one-off. And what I love about this is GameStop is trash. I mean, are they making money? It looks like they're earning money on it. They reported 0.3 of a penny, and they lost 3 cents before that. Oh, it looks like they're getting better financially. Their numbers do look like they're getting better. So, hey, good for them. I just don't see it working. Let's see. What else I see in there? AMC. I'll bring up the AMC chart. Right, there's your AMC short squeeze, right? And it's phenomenal move up, but we're drifting lower and lower and lower. The movie name was what was it called? Was it called GameStop? I think it may have actually been called It's a Netflix movie, I'm pretty sure. Somebody here might know it. I don't remember. It was really good. This I feel is strange compared to what was been in the markets before. A Wall Street bets craziness. GameStop. Yeah, that was cool. That was fun. All right, let me show you. You guys feel free to type some more in if there's stuff that you just kind of go. Tom says NVIDIA. Okay. NVIDIA, I think, is just impressive because of where it came from. It literally came from, there it is, Dumb Money. Thank you, G3. Yeah, with Dumb Money is what it was called. Pretty funny. Good acting, by the way. That was really a lot of fun. I think that was a good one. Yeah, there's a documentary, but then Dumb Money is the actual movie, which is just, it's pretty damn funny. I'd like to know where he's at today, because at one point he was up quite a bit of money. All right, let's check out NVIDIA. So NVIDIA, I'm going to put this on a monthly just because it really does do it wonders when you look at this thing from the long-term perspective. I mean, that is a pretty phenomenal chart. You know, and again, I talked about Bitcoin being the single greatest gaining thing I think I've ever seen in my lifetime. Well, you can look here, and this is a 278,000% gain since 1999. Keep in mind, Bitcoin's chart started in 2011. Right? And it's 3 million % gain. So I've never seen anything, nor do I think anything will ever compete with that type of range to the upside. So NVIDIA definitely a phenomenon. And also just kind of when it started picking up steam. You know, Larry Jacobson was on my power trading radio show in 2015. This thing was at $30, and it's done a split since then. Man, I wish I would have bought this at $30. I mean, $30, this thing would be at $45,000. Or sorry, $4,500 per share if you bought it at 30. It's just done that kind of split. So to me, that one's absolutely insane what it has done. But here's the thing with that. Is it really that strange for NVIDIA to be that much of a leader when you think about what they're doing? They are, at this point, almost a monopoly in the technology they have. Now, granted, there will be competition, but they are locked in, right? They have got this niche market of one of the fastest growing, emerging, and what many people feel might be the most impactful technological change in our lifetimes, which is AI. So it makes sense that it looks like this, right? All right, I'm going to show you one right now where you're going to go, what? No, what? This doesn't make sense. All right, let me show you. Here we go. Ready? We've got retail stocks reporting this week. ANF. Abercrombie and Fitch. Now, let's put this back to a daily, just so you can see. I am not a fashionista, but this is a chart that you don't see charts like this. This is very, very rare. This almost looks manufactured, right? I found a chart years ago that every day went up by at least 1 penny, and it started off as a penny stock. And my assumption as to what happened was every day the insiders were just accumulating, like buy 1,000 shares a day. Just hit that button, buy 1,000 shares every single day. And what it did is it created this perfect 45-degree line that went up. Look at Abercrombie and Fitch since 2023. Since 2023, this has a bigger gain than NVIDIA. Let me just repeat that. It has moved up more. If you go to these lows right here, let's go to the low that started back here in 2022. September of 2022 to the peak we achieved just a couple days ago, Abercrombie & Fitch has gone up 957%. 957% for a company that sells clothes. Mind-boggling. And here is NVIDIA, which is up 786%, which has technology that may change the world. But I can look at Abercrombie & Fitch and go, that's a tight pair of jeans there. Look at that denim. That's nice, right? To me, this is just fascinating that this is moving at such an alarming rate to the upside. My gut is just screaming manipulation and telling me I need to start shorting the hell out of Abercrombie and Fitch. But I'm not going to. I'm not going to get in front of this freight train. Margaret says they do have nice clothes. They do, but this price chart, the way that chart is moving, it's basically saying that they have the best clothes on earth and everyone's buying it. Right? Let's look at GPS. Okay, the Gap certainly had a nice rally, but nothing like that. Ross Stores, okay. Ross Stores actually has a pretty impressive looking chart. Macy's, all right. So a lot of these retailers have been doing well, but Abercrombie and Fitch chart to me is just, wow, impressive. That's probably one of the craziest looking bullish charts I've seen for the past couple years. And then we talked about this one yesterday, actually a couple times over the past few weeks, which is GoEV. This might be one of the worst looking charts I've seen in a long time. I actually was going to buy some today. I was going to buy $10,000 worth, but you know what? They've got a split coming up here on Friday. It's going to be, it says 23 to 1. I thought somebody earlier posted 46 to 1. From what I read, it's 23 to 1. And I'm not going to buy anything before the reverse split, because typically what will happen is it'll sell off after that split. So I'll just kind of wait for this one to keep going down. But this is a pretty unbelievable chart that you just don't see charts that are that consistent for that long of a period of time. This has been a 3-year sell-off with almost nothing but down for the past 3 years on GoEV. So I would say currently, as of today, this is probably the strangest looking bearish chart, and Abercrombie & Fitch is the strangest looking bullish chart. There's so many other little things that I could look at too. They had an interesting Netflix show too. Abercrombie & Fitch did, Thomasina? Huh. All right, let me see what you guys are typing a whole bunch of stuff in the chat here. Weren't the executive Abercrombie & Fitch in trouble with the law? I don't know. I don't follow. I don't buy name brand clothes. I just don't buy name brand clothes. I don't spend money on Abercrombie & Fitch jeans when I can find stuff way better, same quality at different locations. So, NVIDIA is the right place at the right time before chips CB got bound. Yep, but now the chips are GPU bound. Due to cloud computing, microservices, etc., you can run a small thread as a GPU. Correct, but they still have the services and that AI chip that is in ultimate demand. And I made this comment before. You're going to see competition for NVIDIA. There's no argument about that. It's like the comment we made 3 years ago in this program, which is Tesla is the lead dog by far, but they're going to get competition. And now we see EVs all over the place, and EV trucks coming into place. You've got GoEV and Lucid and Rivian and a whole bunch of other companies. Are they going to take all of Tesla's market share? Maybe a little bit. Rivian certainly is doing well at this point. A nice move today for Rivian, which I'm happy about. But I think the same thing will happen in the apparel space. You've got competition all the time, AI, etc. I think good. And every time I walk by this store, they have an entire mall smelling like their cologne. Oof, gross. They must have good sales, but their earnings aren't that great. Strange. Normally, market falls fast, but recovers slow prior to 2020. But recovers slowly price 2000 or during 2008. But both 2020 and 2020 market had a V-shaped recovery. The reason for that is just straight up money and capital pouring in. So why are we recovering differently this time than we did back in 2003 as well as the 2009 market rally? Well, the sheer amount of capital. Now, 2009, we had the QE. You had QE1, QE2, QE3, Operation Twist. You had all that money pouring in. But this is way different. This is a very different influx of capital. I mean, literally just, hey, every American, if you make under this amount, you get a $1,200 check. And we'll just, any business that's struggling, we'll give you a non-repayable loan. Just take our money. That's very different dynamic, and that's why you had such a strong recovery. Blue Diesel, that's a good one. Merlin, what about NFTs? I mean, pictures that cost thousands. Yep. Everybody here knows my feeling on it. I have had I've been making fun of that one for a long time. I think NFTs at this point are a joke. I think NFTs are, you're going to make a picture of an ape with some sunglasses. And by the way, I worked with my team back at Power Trading Radio, and we looked into it. I could create 10,000 NFTs, exactly like Bored Ape Yacht Club or exactly like Cypherpunks, and do 10,000 of them in literally 1 minute. It's just a Photoshop package that you put 8 layers, and one layer is the glasses, one layer is the necklace or gold chains, next layer is the shirt, next layer is the eyes, next layer is the mouth, next layer is the hair. It's like that book you had as a kid that had, it was separated into 3 parts, right? The top, middle, and the bottom. And you would flip the page and the head would change or the hair would change. It's exactly what that game was. But now people are buying those NFTs. So I think that's stupid. If you paid, $100 for a picture of an ape, shame on you. I right mouse clicked and got it for free. I don't care. NFTs have huge place in our market. I will say that. Essentially, what you're going to see is an NFT will be an RWA. I think that the name will just kind of switch over because I believe NFTs is kind of tainted with scams and fraud and stupid crap. RWA is real world assets. And what real world assets mean is you're taking physical items in the real world and giving ownership to a token. Your car can now be tokenized, and I could just sell that token freely, be done in seconds as opposed to go through the traditional sales process. And that token will represent ownership of my car, my house, anything that has physical attributes could be tied to a token. I think that's something that's going to be different down the road. Let's see. Jasmine? Jasmy? Oops, I don't know this one. I could look at it, but I wouldn't be able to say anything about it. Typically, when you look at things that are this cheap, it's a pump and dump. Typically, I don't know this project, so I have not analyzed this one. Couldn't tell you anything about it, but I wouldn't touch it right now. Again, my crypto investing is very different. Everything I get into has to have a purpose. You know, I saw a comment in there from Naum talking about Render. Yeah, Render was a great day today. Render actually doing great things, great project. I mean, this has a potential to go substantially higher because of their relationship with Apple and augmented reality and the fact that they're literally doing video rendering on a decentralized marketplace. That's real. That's actual physical project. Now, you know what's not real? This may also qualify as one of the most fascinating things I've ever seen. It was one of the biggest gainers today on the list. Hex. Someone mentioned Hex. Hex is probably one of the biggest scams run by one of the biggest scam artists in the world. He's unbelievable. Richard Hart. You can look it up. This guy is unbelievable. He's got federal subpoenas against him. Here is his Hex crypto. This is an absolute scam. Yet people gobble this stuff up and just keep buying it because you hope you're going to get rich. This is straight up gambling. And typically, if things are in that kind of penny mode and sub pennies, typically means it's a money grab and it's a scam. Once you understand the tokenomics and all that stuff, you wouldn't touch these things with a 10-foot pole. Bitcoin 100,000, 300,000 by the end of the year. I don't think that. I think that's a bit of a stretch there, Christopher. I do have 250,000 as a target by 2025, which I've got a range. I think in the video I did for bar chart, it goes between 180 and 375 is kind of that range based off historical gains in the last year of the 4-year cycle. But I don't think it'll be 300,000. I think we'll get to 100,000 by the end of the year. But Chris, I'll tell you this: if it does get to 300,000 by the end of the year, I will be a very, very happy man. All right, Tom, they are never splitting. Hope the day they will. What are we talking about? Oh, one of my favorites. Look at CMG. Nope, CNG. That's a totally different chart. Let me type it correctly. All right. Says, look at CMG, big fat, nice burritos up 943% in 6 years, $2,700 per share for burritos. Yeah, well, remember, and this is a big thing that people always do, Tom. It cracks me up. I know you're not doing it, you know this, but a lot of people go, oh, it's $2,700, I'm not touching it. Yeah, but I'll bet you the float on this is so small compared to some of the others. Let's go look at the float on this one real quick. Let me bring it up, and we'll go to just go to Yahoo Finance, simple and easy. And we'll go to CMG. So you can simply type in there, go to CMG, bring up that page, and we'll look at the float. I bet you there's not a lot of shares. It's probably just a few million. Okay, so you have 27 million total outstanding shares. Now, if you look at something like, McDonald's, Chipotle, I believe at one point was actually owned by McDonald's. McDonald's has 722 million shares outstanding. So let's do this real quick as a math experiment for everybody here. If I take 722 and divide that by 27, that's a multiplier of about 26.7. Okay, why am I doing that? Because what it means is, I'll go here to MCD, and McDonald's price right now is $291 per share. Okay, that means McDonald's times this by 291. That means McDonald's price, if it had the same amount of shares as Chipotle would be $7,781 per share, right? That makes sense, everybody? It's not just the price that matters, it's the shares outstanding. And since there's 26 times more shares of McDonald's and Chipotle, you'd have to times McDonald's share price by 27.6 or 26.7, and it'd be about 7,000. I think it was part, Tom. I believe it was part. I'm not 100% sure on that, but I remember the talk was it was part of McDonald's, and I think they sold it off. And maybe that's why it's doing so well. I'm not sure. But, I mean, if you think about what Chipotle does, hats off to them. They do a damn good job. Who does not like the burritos are pretty damn good. The food's not bad, and it's fast and relatively inexpensive. Anyway. Hopefully that made sense with that part. All right, I think that's gonna wrap it up for me. I gotta get going on and do some more stuff here. Let me go and show you the economic calendar and our earnings calendar for today. Here is what happened. Dun 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 dun. If we look at the testimony, I did not listen to testimony either from the banking one today or the Senate subcommittee yesterday. I need to, but I've just been pretty damn busy. We did get a rate announcement from the EU. Nothing, right? It was expected that Canada yesterday was going to stay the same, and also is for the EU staying the same right at 450. They will stay the same most likely until probably 1 or 2 meetings after the US does any action. So if the US stays flat for a while, Canada and EU will probably stay flat as well. So the other pieces that were important for today, you saw Challenger job cuts. We had a cut of 8.8% on Challenger job cuts. That's not bad. And that's pretty much it. Now for tomorrow, we do have big news. ADP non-farm employment change already happened this week and was worse than expected. The unemployment rate is coming out, and that's expected. It says 3.7%. Expectations are we're going to stay right there. Again, this doesn't matter. At 3.7, who cares? No one, it's not going to bat an eye if this jumps up to 4% or 4.5%. But if it starts getting up above, let's say 4.5 to 5, then all of a sudden you'll hear Jerome Powell talk about it. But again, this has become a non-event. I wouldn't even paint this house red over here anymore. It'd be orange, if anything, maybe yellow. You also have non-farm employment change, which is expected to see a significant decline in non-farm employment jobs. Average hourly earnings is supposed to decline significantly as well, so that is very important for me. Because people making less money, that's less money to spend, less money to promote the economy. Trader Talk says, please suggest coins which are in AI and gaming future. Maybe in the future I'll do a show on that. I mean, I have a course that I do on cryptocurrency with Online Trading Academy, and we talk about that type of stuff in there. I don't usually get into the weeds of specific project calling out because I do that in my class for Online Trading Academy. So we'll see. Maybe I'll do something like that in the future. Argentinian peso? Who's trading the Argentinian peso? Come on. No one's trading that thing unless you live there. Pretty soon, Argentina will make an announcement, probably within the next year, that they will allow Bitcoin as legal tender. When that happens, you're going to get another big surge in crypto. It's going to be awesome. All right, guys. Thank you to the questions that came in, which spurred all of this. That was from James, which asked me, what's the wildest thing you've seen in the markets? I mean, I've seen a lot, and I know that it's not going to change. There'll be more and more unusual things happening. There'll be new products that come out. There'll be new technologies. There'll be new scams. There'll be new amazing surges up and big crashes down. I guess one thing I did not mention there, which I'll leave you with this one just to kind of mull over the weekend, we got one day left, but I've mentioned this before, is if you look at the S&P 500, so bear with me as I bring up the S&P futures here, and we'll put this on, let's say, a weekly basis. I think this might qualify as one of the strangest things. This chart right here, to me, is just insane. And because this crash that I've got my cursor over from 2000 to 2003, that was a 50% drop in the markets. And everybody around the world knows dot-com bubble burst, right? That was the dot-com bubble burst. And then you look over here in 2007, when we fell from 2007 to 2009, that was the financial crisis, which was, what a crazy, crazy, crazy thing to have the markets drop. Another 57%. And then all of a sudden, we've had this rally up since 2009, and the markets have just literally not looked back. We had one blip because of COVID in 2020. Other than that, it is just surge, 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 surge. I think that this might be one of the wildest things that I've ever seen in the markets. That this market continues to accelerate like this without some big major drawbacks, a major crash. And I don't know when it's going to happen, but I get this feeling that at some point, maybe in the next 5 to 10 years, this will be corrected, right? This will come back down. And even if we had a 50% decline, which I would say would not be out of the ordinary. 1 second, let me just get that drawn in here. 50% from where we're at right now would bring us down to roughly 2,500 on the S&P, which really wouldn't be that bad. All right. So yeah, I think this might be the wildest thing. The fact that it just is unstoppable. Now, for anybody in here who's looking at your retirement accounts, you're loving this, right? You've got massive paper gains, but I'm a firm believer in just the short time that I've been trading, again, since 1996, that these things have big corrections. You don't get a one direction move like this forever. It will have a big correction and erase a lot of those gains. So it's all about being defensive, buying some protection for your portfolios. And if it ends up being that you paid for protection that you didn't use, that's fine. But the higher that this gets, the more likelihood your house, the analogy would be that the more likely your house is going to catch fire. All right, it's getting to be fire season. What about national debt? That chart looks nuts as well. Yeah, I don't have that one here. I have mentioned many times that the M1 money supply is probably the craziest chart. Great, I'm going to be making an hour show today. Was not going to happen. So here's your M1 money supply. This I've said many times. This is why we are in the situation we're in. I'll just let that stew with you for a second. You had since 1960, going all the way back to 1960, we had from 1960 to 2020, money supply grew all the way to 4 trillion. And then in a period of 1 month, it jumped to 16 trillion. So you're telling me that you have put in 3 times more than all the money in circulation in 1 month into the economy. That might be the craziest looking chart that I've ever seen, ever. Okay, so let me wrap up with that. I don't want to do an hour show. Yeah, turn off your cap locks, day trader. Anyway, guys, that's going to do it for me. I'm going to wrap up. If you have things you want me to cover on tomorrow's show, you can email me at TraderMerlin@gmail.com. We'll see. It's going to be a Whiskey Friday for sure, a celebratory one, given all these great market moves. I didn't even look at the market data on today's show, so we'll do a little bit of a weekly wrap-up there for our trading week wrap-up on Friday's show. You can email me, again, TraderMerlin@gmail.com, or put your comments down below any of the YouTube videos, and I will get to all those there. Okay, thanks, everybody. I will see you tomorrow. Take care.